I buy my first home right away, by the time I retire, my mortgage will be paid off. When the rates drop, at that point, I'm going to improve my cash flow if I decide to keep the property. When it comes to buying an investment property, we don't look at your personal income. If the numbers work for that particular deal, income doesn't matter. It doesn't matter if you have a job or not. It doesn't matter if you have pay stubs. So the process is actually easier compared to when you buy a house to live in. What's your purchase price? What is the rehab amount? And what is the after repair value? And then also what's their estimated credit score?
What really got you excited about the field? You're doing your 9 to 5, and then it's like, hey, real estate. Well, if you could explain to the audience, as far as what got you started.
So, and I'll keep it simple, right? Because my story is actually very simple, right? Before I purchased real estate, I had a full-time job. And at some point in time, I realized that, a home mortgage is 30 years, from what I know, right? Just before I purchased my first home. And then you also hear you work for a company, you work for about 25, 30 years and you retire, right? So I say, you know what? If I buy my first home right away, by the time I retire, my mortgage will be paid off. And that's literally how I got started to say 30 years working, 30 years mortgage. Let me have that paid off. Because I also knew that when I hear that when you retire, you're on a pension, and that's typically lower to your salary. So that was my whole thought process at the time. So let me buy right away when I start working, and I'm gonna work someplace for 30 years. So I thought, but by the time I'm done, my mortgage is paid off.
Beautiful, man. Beautiful. So motivation, not going broke by the time Social Security finally kicks in. So I appreciate that. Now, with the clients that you work with, do you have clients like purchasing investment property, in the current environment where interest rates, are kind of sky through the roof? I know recent news has been saying, around the high sixes, low sevens. Are you still able to work with individuals when it comes to that?
Yeah, so I guess to answer your question, yes, right? Because investor clients, the interest rate is one part of the equation. And then if you think about the thought process of a investor, right? One thing that investors like is one-on-one negotiation, right? So if you think about a house is for sale and the rates are higher, most traditional buyers, even some investors might not even want to purchase because they say the rates are high. But a skilled investor will say, I can have one-on-one negotiation and I can get to the price that works for me because the numbers still work at a higher interest rate. And I'm able to negotiate with the seller one-on-one. When the rates drop, at that point, I'm going to improve my cash flow if I decide to keep the property. So yes, I have investors who are currently still actively buying in this environment because the numbers work and they have less competition. And it meets the criteria. They can go ahead and purchase the property.
Okay, great. No, that's awesome to hear because you hear so much fear going on, especially with the mortgage rates. But it's good to know that there are still people, and I mean, it's seen on the news too. Properties are still being built, developments are still being made, deals are still being active. So I appreciate you pointing that out. Now, house hacking. For those that don't know, you pretty much get a 4 unit, live in one, rent out the three. But is it purchase? For you, is the process to purchase investment property the same as buying a home to live in, such as house hacking?
No, it's slightly different because when you're going to buy a house to live in, the guidelines requirements are based off of traditional residential guidelines, which may require you to have your pay stubs, your W-2s, maybe even your tax returns, things of that nature. When it comes to buying an investment property, we don't look at your personal income. We were actually about the property, the asset itself, those numbers. So for example, what's like the rental income of that particular property? Or what is the rehab after repair value of the property? Because if the numbers work for that particular deal, income doesn't matter. It doesn't matter if you have a job or not. It doesn't matter if you have pay stubs. So the process is actually easier compared to when you buy a house to live in. So it actually sounds strange, right? But it's actually easier to buy investment properties because you don't need to have a job. You don't need to have income. You don't need to have W-2s. You need to have a property that where the numbers make sense. And if it does, we can find you finance and options to purchase that property.
For the first time investors, what are some of the typical questions that you typically ask them? I know folks will probably just say like, "Hey, I'm ready to invest," but it's definitely a two-way street. So, what are the questions, that you're typically asking investors before they get into investment property, whether it be for a rehab loan or a DSCR loan?
Yeah, so going back, to the type of asset, right? So I would say typically for investing, you have short-term money, which you may hate the term, hard money or private money or bridge loan. At the end of that, I classify it as short-term money because you typically have it for say 6 to 24 months. And those are typically used if a property needs rehab. And so if the property needs rehab, I want to ask investor, new or experienced, what's your purchase price? What is the rehab amount? And what is the after repair value? And then also what's their estimated credit score. And so long as those numbers can kind of show that you're going to force enough appreciation in that property, that will help to dictate as far as if it qualifies for a rehab loan. When it comes to, say, I call it long-term money, where the property is, say, turnkey or very minor cosmetic, you're going to take care of yourself. I'm going to ask that potential investor, what's the property address? What's the estimated current rents, taxes, insurance, and the estimated credit score? Because once again, I want to analyze it based off the actual property itself and nothing to do with the personal income.